In the name of Allah, the Beneficent, the Merciful, today I will discuss about financial statements. That is the point, main task of a chartered accountant as an external user to prepare financial statement. Okay, at first we have to understand what is the purpose of accounting. What is the purpose of accounting? Okay, purpose of accounting information. So we have to identify the core responsibility of accounting information. The accounting information, accounting information, accounting information. Accounting information. At first, we have to understand accounting. Accounting count. Accounting only count. Calculate. Count. Information. This is information. Accounting this is count. Count means to calculate. So, calculation is the main task, main activities, main responsibility to identify of information. Count, calculate, how much, how many. Calculate by presenting by the numbers, only numbers. This is the time to present financial situation of an entity by counting or presenting the digit. When we will present, represent digit or numbers by calculating the information of a business entity, any user can understand very easily what is the situation of this entity. So, to understand the financial status of an entity, accounting is the means as main tools. So, we have to understand What is accounting? Accounting is a system of analyzing, recording, and summarizing the economic information and communicating to the intended users of this information. So, first of all, we have found that analyze accounting is a system, a procedure, a way of accounting is system or way or procedure অ্যাকাউন্টিংটা হচ্ছে কাউন্টিং এর একটা সিস্টেম। অ্যাকাউন্টিং ইজ দ্য সিস্টেম অফ কাউন্টিং ইনফরমেশন, কাউন্টিং ফাইন্যান্সিয়াল ইনফরমেশন। At first, 3 steps of counting in financial information, such as number 1, analyzing the financial information, that is source document of financial statement, financial information. We have to analyze at first, then recording. Now, after analyzing the financial information, the next step, we have to record that information. This is the step of accounting: analyzing, recording, and summarizing the accounting information or financial information of a business or an entity, either it business, profitable or non-profitable. So, at first analyzing, then recording, and summarizing. SUMMARIZING, summarizing the economic information, financial information of an entity. And last of all, the communicating the information to the intended user. Okay, so the purpose of accounting information. First of all, what is accounting? Accounting, the core word count. Count means calculate the financial information. Financial information. The step of counting is a system or way or procedure. Count is a system or way or procedure of financial information. Okay, system. That means accounting is a system or way or procedure, either it manual or ERP or software. So accounting is system, way or procedure of counting financial information. The step of counting is at first analyzing the financial information of an entity, then recording the financial information of an entity, then summarizing the information of that entity. After summarizing the information, we have to communicate to its or that entity's intended users. Okay, this is accounting. So accounting means that it is an information system which at first analyze, then record, last of all summarized the financial information of an entity. After complete completion, this summarization, the accountant or chartered accountant or the responsible party have to communicate this information to its intended user. So let's conclusion. Accounting is an information system. Information is a procedure. One, accounting is a way. Accounting is a way. What's way? Counting way. Counting way. Count. Only count. Calculation. Calculating. Calculation way of financial information by analyzing, recording, and summarizing the financial information of an entity. And last of all, communicating the information to its intended user. Okay? Analyzing means the source document we have to found, is it event or transaction? Event means everything is events, but all events are not transaction. All transactions are event. Transaction, when we will identify a source document that is it related with financial change, financial impact on an entity, then it will be only transaction. So at first we have to analyze source document, that is it financial impact on an entity. If the impact of financial increase or decrease or impact of an entity, it will be transaction. Otherwise all the information which is not impact, influence of business entity will be only event. No event will be treated as counting. Only transaction which is influence to increase or decrease of its assets, liabilities, income, expense, drawings, then we will trade by the procedure of counting. So, analyze means source document we have to analyze. Is it event or transaction? After completion analyzing, we have to record in the books of accounts. Journalizing, then posting to the ledger. Journalizing, then posting to the ledger. So, analyzing, journalizing, and recording, this is the steps of bookkeeping. So, analyzing and recording is the surrounding area of bookkeeping, not accounting. Bookkeeping and accounting is not similar. The area of responsibility of bookkeeping is analyzing along with recording of financial transaction of an entity. But when we will recording this transaction of an entity, we have to keep in mind that all transactions rely only source document which is authentic, not false. As an auditor, as a chartered accountant, we have to keep in mind the source document is transparent. The chartered accountant or an auditor always skepticism minded. So, next step, summarizing. Summarizing means all the recording information in the ledger. The summarized information is trial balance, all accounts heads, cash, account receivable, account payable, rent expense, so on. The debit balance and the credit balance of ledger account. The debit balance and credit balance of ledger account prepare a trial balance. From that trial balance, we have to prepare summarizing the accounting information by income statement, balance sheet. Income statement means that a statement where includes all types of income and expense and others comprehensive income. This statement is called statement of income statement, statement of income, so summarizing means the statement of financial position. The earlier it's called balance sheet. Statement of financial position. Statement of financial position, statement of profit and loss and other comprehensive income, statement of changes in equity, statement of cash flows, and notes to the financial statement which is related of financial event or transaction of an entity. So, summarizing, analyzing, recording, this is the three steps of counting of financial information. And after this step, after this procedure, we have to communicate the reports. Report means financial statements. Financial statement means statement of financial position, statement of profit or loss and other comprehensive income, statement of changes in equity, statement of cash flows, notes to the financial statement. This first five steps, the five reports or statements, we can say only financial statements. This report we have to communicate to its intended users. Intended user means its manager, its owner, at present, or potential investors, external user such as tax authority, other related stakeholders of this entity. So, the summarizing or the statements very important for external or internal user of an entity throughout the world. As a chartered accountant, we have to prepare transparent financial statement. So, accounting only count financial information of an entity which represent by the reflection of economic information by calculating various steps such as analyzing the financial transaction or events, then recording the transactions of that entity, and last of all, summarizing the transaction from its books of records. After preparing the summarization on a statements such as financial statements, including statement of financial position, that means balance sheet, where included only assets and liabilities at a specific point of time. This is the snapshot. Financial position is the snapshot of an entity, of a particular moment. And statement of financial position also reflect the at the particular points of times total asset and total liability of that giant or very small entity. Okay. Next, statement of profit or loss and other comprehensive income, also summarizing the data. Summarized financial information presented, also the statement of profit or loss and other comprehensive income. In this statement, all types of income or expense will be reflected very carefully. And in this statement, we can justify, we can measure, we can calculate the profit or loss of an economic entity. And also, we can treat the provision of net tax liability, which we have to deposit national exchequer. Okay, and third statement of changes in equity, the ownership of its owner of this entity, specific the public company, shareholders equity. Changes of shareholders equity represented statement of changes in equity. And last of all, we have also present cash inflow or outflow at the statement of cash flows. So from the beginning of period of that entity and closing of that entity, all types of only cash inflow and cash outflow, cash incoming or cash outgoing, represented by this statement. Overall, various types of events, transactions which is related about this business entity or entity, we have to present for disclosing the critical clarity or clearly or transparency notes to the financial statements. That means financial statements we can understand very easily by observing, analyzing the notes included in this statement. So, this is the summarizing statement of financial position, statement of profit, loss, and other comprehensive income, statement of changes in equity, statement of cash flows, and notes to the financial statement. And these financial statements, that means FS, have to communicate by publishing newspaper or others media as publicly to its intended user. So the importance of financial statements or accounting is very important, because internal user of an accounting, internal user of an business entity, the manager who takes proper decision to continue its business operation on the basis of counting. Overall, the owners or shareholders of this giant company take proper decision to stewardship its assets, to take proper decision by the loan provider, such as financial institution, have to understand, is it stable to repay the loan statement along with its interest? So as a banker, as a financial lender, the key person have to take decision on the basis of financial statement. The tax authority also calculate their revenue on the basis of financial statement. The supplier also at first analyze in their mind, is it possible to supply regularly on credit and collect their credit figure from that entity which will purchase from the supplier on credit, and is it continue in future or shut down their supplying flow of materials service. So supplier very carefully think, is it stable to pay their liabilities, their receivables? As a result, various types of stakeholder, either internal or external, financial statements is the key element, key tools to take proper decision. So the purpose of accounting information is very, very important. Okay, we can summarize now. Accounting is an information system. Accounting is information system. By counting financial information, following the procedure, step on analyzing the financial data, recording the financial information, and summarizing from books of records, and last of all, communicating the summarized data by statements, financial statements, to its intended user, where included internal user or external user. As a result, the importance or purpose of accounting is very, very important. Even as a chartered accountant, we have to calculate, we have to find out the accurate financial information as a financial engineer. Thank you.